Yo, what is up, guys? This is John. From John, the CEO or whatever you want to call me. The owner of Bullish and Bears Trading, or just ass trader. I don't care. All right, but today we're basically gonna be talking about like what exactly to look for in charts, and how to read charts and be like, okay, what am I gonna do here, and stuff like that. So, I can't, if I'm being honest, guys, I can't really give you an exact answer and be like, this is exactly how you read a chart, but I can give you some ideas and then you could kind of go from there. So, um, going back to what that question was exactly, what exactly to look for in charts, there's a couple things that you could look for, and that's your support and resistance, and different type of things depending on whether you're going long or long for up more upside or short for downside, and that all depends on holy shit, arc broke out. Okay, we got out of this one for pretty good profit here today. This could run a little bit more, but the expiration date is pretty already close, and I'd rather just take profits. Okay, so that's not about this video is not about ARC. It's about trading. But there's a couple of things that you could do, and it depends on what you like to do. And trade and use trading. Um, you know, it all depends on what exactly your strategies are, and it all depends on. There's so many different strategies based on different types of um you know trades, because you have your swing trade, you have your day trade, you have your long term trade if you want to buy shares. um and I'm just gonna basically talk about a little bit about my strategies, and then you guys can obviously see your own strategies. But what I like to do is a lot of pivot points, a lot of Fibonacci, and a lot of trend lines. So what exactly is Fibonacci? So Fibonacci is basically a tool. Um, and if you go here, Fibonacci retracement, and if you look and you extend this Fibonacci, and one thing that I do like about the Fibonacci and that I use a lot is the 382 and the 618, and the 382 and the 618. You call it kind of you could kind of call them your golden zones, because these are pretty big important levels when a stock retraces from an impulsive move up or an impulsive wave down. You could use your Fibonacci on the way down and being like, okay, let's just say here from here, and then you could be like, okay, this stock can retrace all the way up to here, and then it'll fall back down. So here retrace all the way to the 50, and then right back down. And obviously this is not a clean clean representation, but I'm just explaining a little bit about what Fibonacci can be used, and what levels to look at, which is your 618 and your 382, which are always the most important ones. Obviously you would look at other levels here, which are pretty important, but like I said, the most important ones are the 382 and the 618, as there are 33. Most of the retracements for stocks that have gone up or down are mostly pretty importantly stressed out that most stocks retrace about 30% from a move up. So let's say a stock went up, like right here, let's just say this is a 50% move. Based on that 50% move, and obviously not the stock would not go down 33%, but based on that 50% move right here, and this, I said, let's just imagine this is a 50% move, a 33% retracement would happen of that 50% move. Um, and I also use moving averages a lot. You have your 8 day, your 21 day, your 50 day, your 100 day, and 200 day. Other traders like to use 20 day. Other traders like to use your EMA, which is your exponential moving average, but I like to use the simple moving average because it's not exponential, and it kind of just it's more smoother. And obviously there's not a lot of difference between the EMA and the MA. So here, this one's a little bit more. This one's curling more. This one has a little bit more, movement up, down, based on the move of the stock. But if you look here on the 50 day, you know, it's kind of more smooth. Um, and you know, what I like to look at in charts is high probability candlesticks as well. If I look at something, you know, like an upper shadow, which is, you know, something like this, then this one doesn't really have much probability of happening out, and you know, we will probably have more downside. So let's say, you know, that you could look at this upper shadow and be like, okay, this has a 60% chance of playing out. So you would kind of look at here, and you would kind of be like, okay, what exactly is the upper shadow? You know, it's a stock that has a big range on the top and a small candle with the open and close on the bottom, um, or kind of like a spinning top wave, way of looking at this candle. So you could look at that or that. So you know, trading this candle, you'd be like, okay, let's look at tomorrow and being like, okay, let's watch the break of this low, which is kind of like intraday support, and then you would obviously have your this look how this stock actually played out. You know, remember how I said that some of these have 70% chance of playing out. Well, 70% actually happened, and you know, we broke down below that low intraday low because it would kind of be support. And, you know, we had big fall through here for almost a $4.69 cent move, which, you know, is pretty big for Apple. So, I mean, that would have been a pretty insane trade. I'm not gonna lie, almost for. I mean, if you traded the contracts that expired on Friday, you know, this would probably have done about 200 to 300% easily. Um, and here, you know, we have another one right here. We have you know, we have like I said, in these you learn on the way, and you gotta make sure that you learn them, and you know, make sure that you memorize them, because you know, you're gonna look at this stock, and you know, and then you're gonna be like, okay, exactly am I looking at? So this one could actually be an inside day up. So you know, what exactly is the inside day up? So this could be, you know, this could be a nice hammer, and then, you know, this is an inside day candle, you know, so, and a doji. So you know, it could be a doji sandwich up, and obviously, like I said, you'll obviously some of these terms you won't understand, but you know, as you get into trading and as you you know, start learning them, you obviously just look at them and be like, okay, this is exactly what I'm looking at. This is that, you know, like I just said, you know, I'm looking at this pattern and be like, okay, this could be a doji sandwich up or a inside day up. So what exactly could that be? If the inside day right here, it's trading inside the range of this candle right here, and basically you would kind of look here and be like, okay, this has to break, you know, this today's intraday high to be able to complete that inside day up and probably run to 137, and this would probably be your next resistance right here. 37.9, because it's the pivot level. This, and what exactly is a pivot level? Is basically interest in price. So you know, this could actually be a pretty interesting and very good pivot level, because you know, it has multiple times that if it's touched it and come back down after touching it. So when right here, you know, we have another one right here, you have another one right here, and that's how you kind of find your pivot levels. You know, you kind of look at points of interest and be like, okay, what exactly could that be? And you know, right here we have another pivot level right here that could actually be pretty useful. 1, 2, 3, 4, 4 times. So kind of like a W, but 1, 2, 3, 4, and then you know, right here would also, you know, you could also see here right here where this pivot level actually played out. And obviously, if you looked at the pivot level from right here, you would obviously have already this pivot level right here and kind of be like, okay, this could be a breakout. And then, you know, when you break out here, you play this range, and then you know, it had like inside day up, tried for the inside day up, but couldn't, but then finally had the inside day up right here. And actually, this could be a morning star reversal, increased volume right here, and pretty big range right here, almost 2.5%. And obviously, a Morningstar reversal is basically a bullish pattern that has high probability of playing out. And also, you know, that there's many things. And right here, this could be another inside day up right here. You know, obviously, the trade didn't exactly play out this day, but you know, it did play out this day right here. And there's, like I said, there's many things that you gotta look at and be like, okay, what exactly is this? And your moving averages, you could also use them as support. I love using them as support right here. Like you can see right here, this is you know, it kind of gapped down, and then touched the 50-day moving average, and then bounced right off the 50-day moving average by probably the cent, probably a couple cents. Right here, you can probably see it right here. Look, it about, you know 15 cents. So, let's say you're looking at the 50-day moving average and be like, okay, let's see if it bounces off there. You would kind of go long there. And also, look, like I said, this pivot point is right on the 50-day moving average. So this would have been an amazing trade because you have two supports right there sitting at the 50-day moving average, 50-day moving average, and the pivot level. You kind of go along here and be like, okay, let's play this range, and then you would have an amazing trade right here because you would go from 129.21 to 132.32, which is a $33 move. And like I said, $3 moves for Apple are pretty big. Because it's a pretty heavy stock. I mean, you can see right here, market cap $2.29 trillion. Um, but yeah, I mean that would have been a great trade. I mean, and these are kind of just small things that you would kind of look at. I mean, like, okay, what does this mean? What is that? Like, you know what I'm saying? And what does that do? And obviously, like I said, you won't understand much of it unless you start actually putting it into practice. And of course, like, I didn't know much of this at all when when I started trading. But like I said, as you put these things to practice, you kind of look at things differently and kind of continue to recognize them and stuff like that. Um, but yeah, guys, this is kind of like a quick rundown of what to look for in a trade. Um, and that'll be all for this video. If you have any questions or any more questions about this video, please make sure to just let me know, and I'll be happy to answer them and stuff. You guys know that. But yeah, man, thank you guys so much for being part of the Discord. Thank you guys so much for watching, and have a great rest of your trading week.